Billionaire Brick, my friend, thanks for hopping on and welcome to the very first ever episode of Chump Change, in which we discuss things that we probably are not qualified to discuss.
Definitely not qualified to discuss. And Chump Change!
So I understand you've got some questions for me. Let's just get into it.
Plenty of it.
The worst.
Wild day in the stock markets. I've never been this invested, or not even only like literally money invested, or like
what you did there.
Watching the actual news about what the hell is happening with these GameStop stocks, these AMC stocks, people shorting stocks. I'm literally watching The Big Short as we were recording this before this. What the hell is going on, Smithers?
I could do probably a whole hour just talking about what happened in The Big Short. If you haven't watched the movie or read the book, they're both brilliant. You should absolutely check that out.
Incredible cast.
As far as what's happening, you familiar with the term meme lord?
Yes, very.
Basically flipped the stock market on its head in the last week or so. And this has been brewing for a really, really long time. I can tell you, since we mentioned The Big Short, the man who Steve Carell plays in that film, he's predicted a lot of bubbles and a lot of bursts. He's held a position in GameStop for about 3 years now. And that's kind of out there as a thought, because just from a normal person's perspective, how many GameStops have you seen close recently? The brick and mortar industry, the retail stuff, is on the way out, and yeah, stuff changes. So when you hear that GameStop still has over 5,000 brick and mortar locations, I mean, there have been 3 within 10 miles of me that have closed down. And in spite of that, the stock is up, what, 1,700%?
Yeah, they somehow managed to make their stores, I believe, essential businesses. For a while, they were, at least. Anytime I see a used game store, I'm just like, you're dead. I buy all my stuff digitally. You can game share with people, which makes buying the physical copies only like a nostalgia thing at this point. So that business is basically should be fully tanked. And now it's up to what, it was up to what, $500 a share?
What you're going to see is, I mean, it started about $3. It's insanely high. But what you're going to see is really high volume, which is what drives the price of a stock. A stock on its own, if you own one share of something, technically you're supposed to have a vote. That's not really how it works anymore. It hasn't for about 150 years. But a stock itself has no intrinsic value. Owning a share of a company doesn't entitle you to anything. It doesn't. If the company makes a bunch of money, you don't get any of that money unless they decide to pay it out to you via dividend. So what makes the difference between debt and equity is a debtor. So if a company like GameStop issued bonds, they'd have to pay back your coupon with interest on top of that. And there's a whole bond trading thing that we won't get into here. But debtors will always be paid first as opposed to shareholders. So if a company goes bankrupt and all of the debt gets paid off and they pay off everything else, in which case they shouldn't have gone bankrupt in the first place, then maybe you get a little percentage of that money that's left over with a stock share. But otherwise, a stock is only worth what someone is willing to give you for it. It's simple supply and demand.
How does this benefit a company like GameStop or AMC or the hedge funds?
Well, it's shitting all over the hedge funds, which I'm fine with. But
yeah, same.
As far as, save AMC trending on Twitter and things like that, this isn't actually going to impact these companies in one way or the other. These companies, if they own shares, it's kind of in a pool. Think of like an escrow account when you're buying a house. It has to be kind of off the board where you can't just immediately sell it. So a share price is not beneficial or detrimental to a company. GameStop isn't going to make any extra money just because their stock went through the roof. Now, their executives can, or people who have worked there for a long time that might have stock options or something like that, because the share price is exorbitant now and it's gone up, they can sell. But the actual company does not benefit from this. So AMC came up in this a few days ago because a angel investor, quote unquote, came in and basically floated them $1 billion so that they could outlast the pandemic. because they're betting that once we get things under control and a vaccine is readily available and it's safe to go out again, that people will go back to the theater and spend $10 on a bucket of popcorn. I don't know if that's going to happen. I'd be betting against it at this point, but that doesn't mean you can't make money on the stock.
Yeah, it's definitely a tough ask. So more or less is what you're saying is these stocks are being used as puppets to get at the 1% or fuck over the 1% by the people.
The only people that were really targeted in this were the initial funds that took large short positions in these companies, namely GameStop. They are the only people who were suffering from this at the beginning, and they'll try to spin it as, look what the rest of the market did that day. None of that matters. They're just mad that they got cleaned out, and it's the same shit that they've been doing to the general public for years, and now they want to cry foul. I say fuck them.
The reason the market is doing what it's doing is people are sitting at home getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people, and, I think it's inappropriate. We all got to work together and pull together.
There were some very large hedge funds that took a large position betting that GameStop stock was going to go down. So you can do what's called a short sale. What you're doing there is borrowing these shares from someone who already owns them. And in this case, it's almost always a large brokerage or clearing firm. You're borrowing those shares and selling them at the current price. Right then, it happens. Okay, so now what you're counting on is being able to buy those shares back at a lower price when the stock goes down. So this can apply downward pressure on the stock price because you're flooding the market with it.
So basically, if the stock is worth $10, borrow the $10 stock in hopes that it drops down to $7, and then they buy those stocks that they borrowed at $7 to give back to the original, I guess, people that loaned it out, and then they make that $3 difference, right?
Exactly. So in that, like peons like you and I, because we're not billionaires and we're not hedge funds, there's some fees and stuff, but that's pretty much how it works. You're betting that it's going to go down, and you're going to get the spread between what you sold it at immediately and how you buy it back. Technically, there are no rules unless you enter in a contract beforehand. There are no rules on when you have to give that stock back, but the lender can say, with very short notice, like 24 hours, they can come to you and say, hey, you remember that stock that I lent you? Give me that shit back.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works.
Now, a lot of this stuff is being called due from the lenders, okay? And what's happening is the news of a large short position was made public, and all of this information is public at all times. You can go to a website like shortsqueeze.com to find out what the short positions are, and it'll tell you the number of shares, the total percentage of the outstanding shares that are shorted. They have what's called a short interest ratio, which is basically days to cover, to be how long would it take these firms to buy all this stuff back. Okay,
Sure.
So all of this is public information. What happened, I think that this was just like a perfect confluence of events. One of the founders of Chewy.com came onto the board of GameStop. Okay, so Chewy.com, if you don't know, does pet supplies, and they do it all on e-commerce. And GameStop's best bet for survival at this point was to shift solely to e-commerce. All right, get out of the business of brick and mortar. You want to sell stuff to people online. Good call. So they brought this guy on. It included some positive sentiment. Okay, there are some other bulls out there, like our friend from The Big Short, who've been saying that this is going to happen. This stock's going to make a comeback. It also was a target for acquisition. I think it would have made a lot of sense for somebody like Amazon to purchase this. That's probably not going to happen now because the stock price is through the roof, but that's a whole nother story. So back to the short squeeze. If you find out that a large firm has a huge position on this, what you can do is either yourself buy a large portion of a company like GameStop, or tell everybody on the internet, if you're a good enough meme lord, we need to all buy this now. It'll drive this price up. And then these mutual funds will be scrambling to purchase this back, because they don't, what they don't take into consideration is that the downside of this could be theoretically infinite. If your stock, if you borrowed a stock at $1 and sold it, the price of that stock can go up to theoretically $1 million a share. And if you bought 10,000 at $1 and it goes to $1 million a share, that is unlimited downside for you. Whereas if you buy a stock and you're long on it, meaning you think it's going to go up, you buy GameStop at $5, worst it can do is go to zero and you're out $5.
Right.
So this short squeeze happens. It applies a bunch of pressure and increases the demand for this stock, which shoots the price through the roof without the company even doing anything. I read a headline when all of this first started that was something as blunt as Nokia shares reach all-time high, no one understands why.
Yeah, I jerk off, yeah.
How many times a week?
Like, three, four times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
This is changing. What kind of ramifications are going to happen after, this gets cleared up? Can this get cleared up? I mean, they're holding trades and acquisitions of these certain stocks, which is that illegal? Why are they holding stocks? Isn't that against the free market?
Oh, well, there's a lot to unpack there. First of all,
Yeah, there is.
anybody who tells you that it's a free market is living in the past. The free market's been dead for a really long time. And that, you know what? Things are supposed to evolve and change. As far as the fallout from this, I mean, you're kind of already seeing it with brokerages delisting these and basically not offering them up for sale. I've looked at 3 of my different brokerages today, can't get these stocks anywhere. One of them flat out just went down. Ally was just completely down. So fallout, I mean, for whom? Some hedge funds are now bankrupt. And you know what? They took a big risk, and 2 weeks ago, they would have been the first ones to tell you that investing is risky. But now that they're the ones eating shit on this, they want to cry foul and say stuff like, this isn't how the market was supposed to be used. Well, you kind of burned that bridge when you made derivative investment vehicles from derivative investment vehicles. And what a lot of people are learning now is that you can leverage the shit out of this. And if you're in on the right curve, you can make literal millions of dollars. Now, I'm not going to sit here and tell you what you should or shouldn't do. 1, because you'll probably be broke if you listen to me. But 2, that's could land me in jail. I'm not licensed to advise you on stock purchases. That's not what we're doing here. But it's kind of just this interesting study into how pissed off can people be. Because what you're seeing is these people that are these people like you and I who have a shitload of college loans or rent to pay, and they're leveraging the shit out of $100 and turning it into 40 grand. So that's where people are getting pissed off. That's the rich people who don't want you to know how this shit works. And it's what they should have been teaching you in grade school when you were learning how to write in cursive, which we definitely use all the time now, instead of 100%. How to do your fucking taxes or invest in a 401k.
Now, y'all look money hungry, and that's good. Anybody tells you money's the root of all evil doesn't fucking have any. They say money can't buy happiness. Look at the fucking smile on my face. Ear to ear, baby.
Robinhood. Their whole concept is to take from the rich, give to the poor. It's like you could do individual trading freely for the most part. That's what it was supposed to be. What happens to them now that everybody in the entire internet is just absolutely furious with them?
Well, first they get review bombed. Knowing our news cycle the way it is now, people are mad for about 3 days, and then as soon as they can get back on Robinhood and trade whatever they want, they'll be fine with it. I'm sure that Robinhood is going to change some of their rules and tell you ahead of time, with whatever disclosure, that they can basically halt trading on a stock, an individual company at any point in time, which was always true anyways, but now people are mad because they found out that it can happen. As far as what happens to them, probably nothing. There is a side of me that thinks that they just couldn't cover the sheer number of shares outstanding. The calls to purchase the number of shares that were out there, they just couldn't meet it because the demand was so high that the companies just couldn't fulfill those orders. But that's kind of letting them off the hook, and I don't think they should be let off the hook for this.
So there's
supposed to be trading for the average Joe. If you're a billionaire, you're not trading on Robinhood.
You're one of the big ones like Fidelity and other Schwab.
Yeah. Now, something to take into consideration for this. And since you're making money off of AMC right now, presumably,
Not. I tried, but now
an opportunity to, which I think is
Yes.
important to discuss, because at one point your position in AMC had grown exponentially, right?
for a while, yes.
So let me make this really clear for any beginner investors. You have not made a dime until you sell. There is always the possibility that the next time you check your phone and your position in Robinhood, that has dropped significantly. So keep that in mind. I know it's great and everybody's going to tell you to hold. Again, not giving advice here, but until you sell those shares and someone purchases them and they clear, you have not made a dime.
Wow, there's a lot to unpack here. Now, what do you think of Dave Portnoy being the voice of the people?
See, he's definitely commandeering this escapade. This all started on Reddit. Don't give Dave credit for that. Now, if he's backing it, don't listen to rich people.
Right. He has one of the biggest platforms that helps escalate, I feel, a lot of this as well. Even though obviously it started with Reddit. Reddit kind of had this thing boom. But once it started to catch fire to the actual media, I feel like he put gasoline all over this thing. He's calling people out left and right. He's calling out the Mets owner for helping out with, bailing out Melvin, that whatever company that kind of got boned by this short.
Melvin and Citrone both got absolutely hammered. And frankly, I think that their entire capital base is gone now. So Cohen came in and I believe bailed out Melvin. But that just means that he's buying the dip, to use a Wall Street Bets term. They get completely devalued. He does a cash injection and all of a sudden he owns a big portion of Melvin Capital.
Right. So now it's just
again
power
getting from chaos in the markets. Same thing is true of Portnoy. So if he sees an opportunity and he has the means to put $1 million into GameStop, all he has to do is incite a group of people who follow everything that he says, and he can affect the market.
Are we witnessing like historic moments right now in history with the way that everything is kind of unfolding?
I don't know, because every week something new happens and I think, man, I can't wait to tell my kids about this when I grow up. And that's just immediately replaced by the next insane fucking thing that happens. So who knows?
Yeah, there's too many things.
As far as an inflection point, probably not, because the people who are in charge of these funds are still billionaires and they will still hold down people who don't have any real power. The only real option that those people have is to follow along. It's kind of a chicken shit move that Discord took down the Wall Street Bets server, and Wall Street Bets, the subreddit, actually went dark for a while yesterday. So these companies are trying to cover their asses, but it's also making it really apparent whose side they're on, and it's not ours. It's on the billionaires' side.
Because they have, obviously, the billionaires can help them a little bit more than the common folk here. But we are...
Except they just steal all of our data and resell it.
What happens when they reopen up these stocks? Are they going to, do you think AMC, GME, do you think these stocks are going to skyrocket because once they become actually readily available on all these platforms, the spite and the absolute public outrage about all of these stocks, is that going to impact the price up? Or do you think they wait it long enough where the hedge funds can kind of get their money out, get out, and everyone's kind of fucked?
That is an excellent question. And if I knew it was going to happen, I'd be very wealthy by the end of this week.
Stock market is one fickle mistress. Sheesh.
Complete horseshit. And I hope that now that this is happening, that everybody kind of realizes that, because a lot of blue collar workers and whatnot have for long looked at this like, oh, that's unattainable. I'll just have to work my hands to the bone forever, and I'll never be able to invest. And with the advent of apps like Robinhood and Ally and things like that, it's no longer the case. So they're sniffing blood in the water. And I've been saying for a long time, the only reason that these musty, dusty old rich bastards haven't been eaten yet is because we just assume that they taste bad. But now the fucking bill's coming through, and man, there might be hell to pay for some of them.
Hand me the hot sauce, baby. So why are hedge fund companies allowed to do what they're doing right now?
The concise answer to that is it's always been that way. Shorting stocks is not something new. I mean, there are news stories going back to the 1800s talking about, large short positions and being squeezed. That was back in the day when a stock was on a piece of paper that was traded back and forth between people. But as the advent of the internet and later administrations of the presidency, not going to get into the politics of things, but deregulation has been a thing on this. Deregulation is what caused the housing markets to crash. Deregulation is what caused the internet stock bubble of the early 2000s. So as soon as you're not holding people accountable for shit like this, they're going to start to exploit it.
It's a stock exchange. There's no money you can steal.
Really? And why are you people here?
This is crazy times, my man. Crazy times. I've been wanting to talk to you about this for the last 2 days, but you have not streamed Hitman yet. I want to see you stream Hitman. Need to get some.
But I do want to reiterate that in the grand scheme of things, you and I are idiots. We have some outside knowledge in terms of what's going on in the market. Don't follow our advice.
We're dumb idiots.
Make jokes and do stupid memes about it.
Exactly. Yeah, we have no business being in the stock market, but we are in the stock market because it's supposedly a free fucking market, not psych.
Nope. Tune in next time when I talk about how we're not on the gold standard anymore.